Have you shopped for a home lately and were not able to find any homes matching your criteria? On behalf of my clients, I'm house hunting every day. This is what realtors do. And my job has become so much harder lately. It is understandable. There were so few homes coming to the market since the beginning of the year. To put it into perspective, 35% fewer listings came to the market so far this year compared to the same time a year ago. And the problem is not just local. Most US metro areas are struggling with the lack of inventory, not enough homes available for sale. Countrywide, the number of new listings dropped by 16%, according to the Federal Reserve economic data. The Bay Area is definitely hit harder by the housing shortage due to the low housing affordability and to the unique geography of the area. Most desirable areas are squeezed between the bay and the mountains, and were built up in 50s, 60s, and 70s. There are very few opportunities to build more housing within a good commute distance to the major Bay Area employers. Most new construction happens in places like South San Jose, Morgan Hill, or East Fremont. But these factors were working here in the Bay Area forever. What's changed now? The answer is the recent sharp mortgage interest rate increases. To some extent, the situation is similar to the Silicon Valley Bank collapse. In the Silicon Valley Bank case, the interest rate increases depressed the current market value of the government bonds in which the bank was heavily invested. Selling these bonds before their maturity created huge losses, and SVB was not able to come up with the sufficient cash to cover the withdrawals. In case of real estate, higher interest rates sharply increased the value of homes for the existing homeowners. It created strong incentives for them to hold on to their current homes and prevented them from listing them for sale. Why? If you would buy a median Bay Area home for $1.5 million with a 20% down payment at the current mortgage rate of 6.5%, your monthly mortgage payment would be a little under $7,600. But if you would have been able to buy the same home at 3%, the rate that was readily available just a little over a year ago, your monthly payment would have been under $5,100. So owners who either bought or refinanced during the low mortgage interest rate period in 2020 or 2021, or even early 2022, are interest rate locked into their homes. They should have a really compelling reason to list them and buy new homes at the current mortgage rates. Saving $2,500 a month on your house payment is a huge benefit from the wealth creation and lifestyle points of view. But this is not just paying more for your new home. If you sell your current home, you will have to find a new place to live in this highly competitive market. You will have to become a buyer on a very strong seller's market. It comes down to people not selling their homes because they don't want to become buyers in this crazy seller's market that is getting even crazier because so few people are willing to put their homes on the market, creating an even worse shortage of inventory. Today's market definitely favors the sellers. Since the beginning of the year, the home sale prices started growing again despite the general economic uncertainty, local layoffs, and recession worries. Year to date, Santa Clara and San Mateo County home prices grew by 15%. Median time on the market dropped from 23 days in January to just 9 days so far in April, another indicator of a strong buyer's demand. As for the buyers, don't get discouraged. There are always opportunities on the market. If you're thinking about buying a home this year or even in 2 or 3 years, click on the link in the description of this video to connect with us. Let's get together in person or on Zoom to go over the buying process from the very start all the way to the day when you get keys to your new home. We will also cover topics you need to know as homeowners. We'll talk about the hidden inventory, ways to estimate market values of the homes you are interested in, and how to make your offer stronger without going all out on the price. This is Michael Tallis with the Tallis team. With major developments happening daily, if not hourly, I will stay away from predicting the next housing market move. I will continue, however, to monitor and report on all the latest trends. If you found this video useful, support us by clicking on the like button, subscribe to the channel, and share this video with other people who may enjoy it. Till next time.